Coming at you live, episode 10, Money Matters with Matt and Rich. Rich, how are you doing today?
Good afternoon, Matt. I'm doing well, thank you. Hopefully we can get some afternoon crowd here.
Yes.
Post-lunch, pre-end of day.
Yes.
Hopefully they can tune in and watch a little Money Matters and listen to what we're up to today.
Yeah, you know, maybe they're just sitting at their desk, they're done for the day, but they can't leave until 5.
I love that. I want that job.
Yeah, literally. That's exactly it.
Oh, my God.
But today's episode, we are going to chat about why using a local lender is better than using, anyone retail or one of those bigger banks. As
Big banks
can see
suck.
I was going to say, as you can see by the title.
Why big banks suck. I've got clients that will reach out as they're starting their search, and they'll ask, I'm going to go talk to my bank, pre-approval, or do you have any recommendations? And, all that type of stuff, kind of on the onset when we start talking about lending and financing and stuff like that. So, most people are like, hey, I'll just go talk to my bank. And I'd like to recommend you, obviously, because you provide some different options. And, I'm sure you're going to talk about kind of what that means.
Yeah, absolutely. So we get it a lot too. When buyers come to us and they say, what makes you different, right? Why would we use you versus, going to my bank? Because buyers genuinely don't know, right? They want to hear from the agent. They also want to hear essentially me. I don't want to say selling myself, but why a broker? Because people
what
just
can
don't.
You offer
what
that
can you
someone
offer?
else doesn't?
Exactly.
Yeah.
Exactly. So, to break down what someone like myself, a mortgage broker versus a bank offers, a broker we're not the direct lender, right? So we're not
your money.
Right. It's not our money that we're lending, and we don't keep the loan. Okay. So what I mean by that is we work with multiple different lenders who specialize in different things, who then lend you the money, right? And then obviously they service the loan, and then you pay them all that fun stuff. You pay your mortgage to them still, but you don't pay Premier Mortgage Lending. You're not getting the money from Premier Mortgage Lending.
So like United Wholesale Mortgage,
Yes.
Mr. Cooper.
So Mr. Cooper, we don't do.
They're not direct; they're wholesale.
So I think they're wholesale, if I remember correctly. Yep. But United Wholesale Mortgage is a big one.
Yep.
We do have some banks that we go to. Yeah, the biggest.
Yeah.
We do have some banks that we go to. For instance, like Flagstar Bank's one we go to. We go to First Trust for some portfolio stuff.
Yeah.
And then there's a couple different.
So you got options.
We got options, right?
Yeah.
And we got different wholesale lenders as well that'll take lower credit scores, maybe higher DTIs, right? So there's a lot of different avenues that we can go down. It's not just this bucket of, oh, you don't fit in this lender's qualification. Sorry, you don't qualify.
You're out. Yeah.
You're out. And with that, they all have their strengths and their weaknesses. For instance, United Wholesale Mortgage closes super duper fast. Mm-hmm. They're a technology-based company, so their fees are cheaper because they don't have 17 people touching the loan that they have to pay. Right? They're significantly cheaper for the borrower. They're quicker for the borrower. It's why that's our preferred person, or not person, just our preferred lender. But, not everyone fits in their bucket because they have their specialties as they want to, which is why, we work with different people. For instance, like I said, the portfolio stuff, if you have to go bank statement loan or, 1099 only, or, if you want an ARM, UWM doesn't offer great ARMs. They don't want them. But we have lenders that do. Yeah. So we're a one-stop shop essentially for your mortgages.
ARM being an adjustable rate mortgage.
Adjustable rate mortgage. Yep. And obviously those are pretty big now, especially for jumbo stuff. Just because their
interest rates
are significantly lower than the fixed. Like we're talking a point to a point and a half lower in some instances. So it's 100% worth it. And then once rates come back down, obviously the buyer just refis into their fixed rate at that point. But it's worth it now to do an ARM.
Yep.
So that's the big difference between mortgage broker and bank. For pre-approval process is always where I like to start with them, because that's when I'm talking to them. That's when I'm gearing them towards and getting them ready for. So we have an LO here, multiple LOs here that came from bigger banks. One in particular who's very big, who you probably know out there. You probably know, and she was telling me that pre-approval process takes a couple weeks to get done.
Weeks?
Weeks. because oh yeah. So you send in your application with this.
Hear that, buyers? You better get started early when you're going with a large bank.
Right.
Like you can't just come to me and be like, I want to put an offer in, because it's going to take weeks to get your pre-approval.
Right, exactly. And the reason for it, and everyone's like, well, why does it take so long? Reason is when she used to get the docs, right, you would literally have to send those into underwriting, and it goes into their queue for them to review. And if they didn't like one thing on the document, or, you scanned the corner of a bank statement that didn't show up, nope, we need a new one. And then guess what happens? You go right back to the bottom of the queue. Yeah. And guess what's in that queue? Purchases, refis, pre-approvals, other loans, auto, personal, right? So you're in this massive queue of lending. Yeah. And you just get stuck at the bottom. So guess what? Not to jump too far ahead, but your closing is getting delayed because Aunt Susan needs an auto loan and she's ahead of you.
Right.
It's like, what?
Aunt Susan, come on.
But for us, 24 hours is the most. Once you get us everything, that's the big caveat, right? I can promise 24 hours.
And why is that?
Because I need all the documents.
Well, why can you promise it?
Oh, gotcha. Because I'm handling it.
Yeah.
So I'm essentially doing the underwriting because I have learned enough about the loan to understand what that means and what we're going to need.
With a high rate of confidence and success.
Correct. Right. Exactly. So for us, we have to be licensed beforehand. That doesn't necessarily teach us how to, calculate income or anything like that, but it teaches us, okay, what guidelines do we have to follow based on, your income, for instance. If you have variable income, it's very different than if you're salaried versus if you're commissioned versus if, you're an hourly employee that has overtime, right? There's a lot of different things in this where we're understanding on how we have to do that.
Yep.
So I'm the one touching it. I'm the one that you're asking questions to. You don't get a different LO every single time, which obviously is valuable.
Yeah, exactly.
So 1 day versus 2 to 3 weeks.
Yeah. There's a
big
huge leg up.
Right. Yeah, definitely. And like you said, you can't really have your borrower go to, if that's the case, go to a bank like that or even a retail lender like that. Some of the retail guys, again, I can't name names, but we've mentioned some acronyms on the show.
Yes.
That, they don't take 2 to 3 weeks, but they get it to you right away, but they're only filling out, a 5-question form. You're not sending in documents. So you get this pre-approval that really doesn't mean anything.
Yeah. It's just what you've told them, they've thrown onto a sheet so you can get a letter to go shopping for a home that you may or may not be qualified for.
Right. Yep. And everyone's, I make $100,000 a year. So, you make 96, right? And that's not a huge difference.
No.
But if you're buying at the top of your price point, it's a big difference.
Yeah, exactly.
that could make or break a loan.
Every dollar counts.
Right. So we need to. That's why I need all the documents. I don't send the pre-approval until I have everything I need, which is also why, generally speaking, our loans can close faster because I'm getting everything up front.
Yeah.
And I'm essentially doing the pre-underwrite up front. Again, I have enough knowledge to understand, okay, you have another house. I need the mortgage statement. I may need the tax bill. And it may seem annoying up front, but I'd rather get that now versus when they're trying to figure out the inspections and everything else that is involved in this transaction.
Yeah. So you can move as fast as the client.
Right.
As fast as they can get you that stuff, we can move. Get it turned around.
Right.
Yeah.
Right. Exactly. And it's just verifying, right? It's not like, I don't want to say it's not rocket science to figure out someone's income, but like if it says salary $120,000 at the top of the pay stub, it's pretty easy to figure out what you. It's pretty simple.
That person makes that amount,
right. So there's definitely some simple instances. Now there's obviously times where you may need more than a day. For instance, you own 5 businesses. Yeah, okay, I got to go through all these tax returns. I would rather take another day or two and be 100% certain versus, flipping this around quickly. We get the offer in and it's like, oh, I didn't calculate, this tax correctly. Or I didn't realize that he was writing this off that we couldn't add back in.
Right. There was a loss somewhere in one of those that you didn't pick up or didn't see because, you rushed through it. Exactly.
Right. Especially when you're looking at 2 years. So really, I'm looking at like 10 different tax returns. numbers start to blend in, and then all of a sudden it's like, oh crap, I rushed through it. I didn't see that 20 grand loss there. I thought that was a 20 grand net.
Yeah. I mean, even still, if it's 24, 48 hours, it's better than a couple of weeks.
Better than a couple of weeks.
Yeah.
Exactly. But just setting the expectation up front with the client on when it's that difficult of a situation. Right. Like, hey, this may take a little bit. I just want to so you don't promise 24 hours if you know it's going to take you more.
Yeah.
Expectations, obviously.
Yeah.
Next big one for local that I was hearing is the underwriting process in general. So, for instance, I can call my underwriter and get things done.
Yeah.
Right.
Hey, Jimmy, we need to look at this or do this.
Right.
Sure.
Right. And they are willing to work with me. Right. They're not these evil people that they are, sought out to be.
They are evil. They're in a dungeon somewhere, and they're just throwing documents back, asking for the same thing over and over again. Yeah. Oh yeah. No, they're evil people.
like for instance, yesterday I was on the phone with one trying to figure out, okay, if we spent the money this way, for instance, like we spent less on the down payment but more on paying off a car, how would that impact the loan? Right, because the borrower wanted to do that. And I was like, okay, I want to make sure that that's going to work first.
Yeah, before it's done.
It's done. So I can call them and say, hey, this is what she's thinking about doing. Can we make sure that that's going to, everything's good before I tell her that? Right?
Yeah.
So we can run situations by each other. Or, if, God forbid, things are going sideways, hey, let's work together to figure this out. And they're like, yeah, let's piece this together.
Yeah, to save a loan, right?
Right, right. So it's another piece. Like, okay, I have all my other coworkers, I have my processors and my underwriters. We're all working together to think, okay, how can we possibly get creative here to make this work? Because a lot of the time situations can be saved. It usually involves money when that does happen.
Sure. An allocation of that money, right? Yeah, where is it going to go?
Exactly.
Is it going to go down payment? Is it going to go to paying off debt? Where is it going to go?
Exactly. Exactly. And that's just something you don't get with those bigger banks, right? They're just like, no, it doesn't work. Get this.
You were telling me earlier about this, is that maybe the big banks, the underwriter may be in some other state and they may only know their name, but they don't have any sort of direct contact until they kick them back the denial or the request for additional docs or, hey, we need to do this or do that.
Right.
So it just slows down the process significantly.
Yeah. And that's exactly it. I'm glad you actually brought that up, right? The denial letter. At those banks, they'll send the LO a denial out of nowhere and say, you have 24 hours to fix this. And it's like, I didn't even know there was something wrong, right? And now you can't work on the pre-approval. You can't work on, making sure that updating people on the files. You now have to spend all of your energy remembering this file, being like, okay, where is this going wrong? Because they don't give you any context. Fix it. You have 24 hours. It's like, what?
Fix what?
Is that right?
I got the name. But all right. Yeah, I got to go back. I got to put everything else aside. But wow. Again, slowing down the process.
Again, just really slowing it down. So underwriting is brutal, brutal there. Just not communicative. There's no teamwork happening. And again, the underwriters can't just tell you how to originate the loan, right? I have to have a general understanding of how this loan can work. But what I can do is run things by them. Hey, are we able to do this? You can literally ask our underwriters sometimes, hey, if I show this, can we add income if I show this?
Yeah.
Right? They want to work with us on this because they want the loan to clear because they want to get it out of their pipeline too.
Yeah.
Right?
Yeah.
So they want to funnel these things through as well. They're not trying to be the person that just kills the loan, right?
Yeah. Well, they're working for their lenders, and the lenders, are lending money to make money.
Right.
If they're not lending money, they're not making money. So let's work together to figure this out.
Right, exactly. The next big thing is the processing side. And I think this is a side that not a lot of people think of because, again, it's not the front end. It's not really the back end closing. It's kind of that part in the middle where everyone's like, oh, underwriters. But it's like the processors are kind of what makes this whole process, right? So if you have a processing team that doesn't understand the loan, that doesn't maybe understand how to communicate what they need to the buyer, and that doesn't understand if they get a doc in to look over it and be like, okay, does this actually meet what they are requiring?
Yeah.
That's why I'm glad you mentioned earlier when you got those times where it's like, I've already given you this pay stub 14 times. It's like, no,
Yeah.
they need it. It's like,
Yeah.
oh, I've already given it to you.
Those dungeon dwelling underwriters.
But a lot of the times it's actually the processors that
Yeah.
cause that issue. So they don't understand, okay, a condition comes out, we need bank statements showing the security deposit leaving.
Yep.
Okay. They look at the bank statement. Our processors look at it. Oh, there's a big deposit here. That may be a red flag. I'm going to reach back out to you. Hey, where did that come from?
Yeah.
Okay, I know that that deposit came from a gift that you came in. We need this.
We need
so
to
they
document
send
that.
all of that in, and instead of reaching back out to you and again slowing it down. Oh, now we need a gift letter. We already have it.
Yeah.
And they can make notes in the file. Hey, this deposit that you're seeing on August 14th for 10 grand is a gift from here, and all that.
So they're catching that stuff before it has to go.
Before it
goes
back.
to the underwriter and then comes back through.
Right.
Yep.
Right.
So they're the eyes double checking, triple
Right.
checking, and
Right.
getting it pushed through.
And that's where you hear some of the horror stories too. Sometimes where underwriting doesn't notice it, it clears through. We're clear to close. Goes to the closing department, and they're like, "Wait, we're gonna close. Yeah, we're supposed to close in 2 hours, but there's this $10,000 fund that LO missed, processor missed, underwriter missed. Closing department's not going to miss that.
Yeah, and all those people are only human, right? So things happen.
Right, and stuff slips through sometimes, but that's where you get the real, like, we're not closing. And, like, you want to make sure that you have everything as narrowed down as possible for it. So, again, local lending, the processors are different even from local lender to local lender, which is why some can close faster and use the same lenders. There's people that use United Wholesale that don't close as fast as us because the processing isn't there.
Yeah, because their team and how they're set up and
right, and that's exactly it too. The whole setup of it. Big banks, the LO processes, which sounds miserable. And not that I don't love my processors, but holy crap, I couldn't imagine trying to get business, pre-approving people, updating people throughout the process, getting all the documents and reading conditions and ordering appraisals myself. Like, oh my God, like you wouldn't have time to get business.
No, and any well-run business has teams and has systems in place, and that's whether you're running a pizza shop, right? Like one guy doesn't like do every function. I mean, some pizza shops they do. Don't get me wrong, but if you want a high-functioning business,
efficient business,
you're going to have each person at each station.
Right.
Look at McDonald's.
Literally,
same thing. Like that's how like Ray Kroc made that whole empire. Stations each had their own jobs.
Right. One person makes fries for 5 hours. But they come out as quickly as they come in. So it's like,
exactly.
It's super, super efficient. But yeah, so, pre-approval process, very different. Underwriters are actually communicative.
And not that Premier or any sort of lender is a McDonald's factory, but
the analogy
kind of makes sense. Exactly. In this situation.
And then honestly, lastly is the closing, right? And it may seem self-explanatory. You're clear to close. You just close, right?
You show up.
You're good. There's a lot more that happens on the back end of this whole operation when you do get clear to close. There's title companies and my closing manager going back and forth, matching your invoices. You've already paid for your appraisal. If you don't have someone that knows what they're doing, and again, for some reason it slips through, you could double pay for something.
Yeah.
We don't want that happening because then obviously that's a tolerance on our end, right? We have to eat that, rightfully so, if we miss that, right? So there's a lot of times that'll happen. The big banks will give closing disclosures that go out, and it's like, I've already paid for this. They're like, you told me it was going to be this,
right?
And then closing costs go up all the way, right?
And that's why I review that with my clients too. When we do see it come through, it's it's great to just get eyes on it and say, hey, this looks right. We got the seller concession. We got the right price. We got the right down payment, the right escrow.
Like that, right?
Obviously, most of the time they're paying for that appraisal up front, so that should be
off.
on the either off or on the debit line.
Yep.
So yeah, those things are important.
Right.
Kind of make sure the numbers all add up, even though I'm not loan processor, loan underwriter, or an officer, but you kind of look at those numbers and say, does this make sense?
Right. Well, and then you see like random fees. You're like, I've never seen, somebody charge that. You
Yeah.
know, I've never seen, I don't know, like a credit report fee of $800, like something
Sure.
absurd like that, where you can look over and be like, okay, like, that's within the realm of what makes sense.
Right.
You can look over and be like, that, what is going on right now?
Yeah.
Like that.
Biggest thing like title companies and everybody misses on those closing disclosures, I find, is the seller concession.
Yeah.
It's usually the most common. That's what I always look for now that we're getting back to that type of market.
Yeah, honestly.
It's good to see that and check those, make sure that, because that's money off the bottom line.
Right. And that's obviously money the buyer doesn't have to spend.
Yeah.
Obviously. So those are the 4 biggest avenues in which we have different, right? And then minor avenues, but I feel like are bigger, are communication, right?
Yeah,
it's obviously key, right? But just understanding that it's more than just that we're not there 9 to 5. It's hey, I have to get this document because, right? I need this because here's how we're going to qualify you. Not just, send it into the portal, right? Hey, you're self-employed. I need 2 years of income because I'm going to average this and this. And then if I see that they have a lot of depreciation, that's a big one for self-employed businesses.
Yeah.
Hey, I call you. Hey, I can add that back in just so you understand where I'm getting this number from. Right?
Sure.
I think just things like that it's that minor touch where it's like, like I now understand why I qualify for this loan.
Yeah,
Not
wow,
just
I
like,
didn't know that.
here's $400,000.
Yeah, right. Yeah, well, it helps to some sense of like security and ease and as to why.
Right.
Like, I don't think I should be spending that much.
Right.
Or shouldn't I be able to spend more? Like,
Right.
And the whys behind that.
Yeah.
It's good to have, you reaching out and talking to them about that.
Right.
Personally.
And just the communication with the payment. Right. That's what people overall care about.
People buy on payment.
Right.
What's my payment?
Right.
And if they're not thinking that way, I make sure they do. It's like, what's your payment?
Right.
What does it matter what the price is, but what's your payment?
What's
is that the comfortable point? Because you're on 30-year fixed debt.
Right. What does it matter?
Is that a good payment for you or not?
Right.
If not, let's go lower.
Let's go lower, right?
Or higher, whatever.
And that's the thing, right? When you go to these retail lenders, you fill out the online form, you go to your bank and you walk in, and they say, all right, you can afford a $500,000 mortgage. And then you go out and you're like, oh, sweet, sounds great. 95% of people can get pre-approved for significantly more loan than they want to spend.
Yeah.
And people don't realize that.
Yeah.
Where, up front, that's one of the first things I'm asking. What are you comfortable spending?
Yeah.
Because I want to pre-approve you up to that amount, so when you go out house hunting, you understand. Okay, this is where I need to be.
Yeah,
and then just with adding repertoire too. Why do you want to stay there? Like especially I'll dig into that sometimes. If it's like boyfriend girlfriend, it's like, oh, you saving for something? It's like you saving for a special thing?
Yeah.
And it's like, no, but like you just relate to people, right? It's like, hey, find out, why, okay, why are you moving to Londonderry? Why are you moving out of Mass? Why are you moving into Mass? Right? Why are you moving to Maine? Why are you buying the lake house? Like, it just on getting a grasp on people.
And what their goals are.
And what their goals are, and then you can accurately help them with their situation.
Yep.
Numbers can only tell so much, right? If the numbers are the numbers.
Right.
But when you hear, okay, I want to spend, $2,500 a month because, right, X, Y, and Z.
Yeah.
It's like, oh, well, have you ever thought about, okay, what if we paid down the car instead of putting more money down?
Yeah.
And now instead of your monthly obligation being $3,000, it's 27.
Yeah.
You have a little bit more house, but now you have more of an asset.
Mm-hmm.
Oh, I never thought of that.
Yes.
It's like
Creative.
you can help people get through with some creativity.
And like 99 out of 100 times when like the pre-approval is not coming from you, and they don't know what their monthly payment is. They're like, I don't know. I got this pre-approval. I don't know. I'm like, oh wow, that's great. That's great. You're looking to spend $3,200 a month. They're like, what? Not really.
Yeah.
Oh, did your lender that from wherever explain that that's probably where you're at with this on a monthly payment basis? Like, no, I thought this was really high. Like, okay, let's break it down. Let's go talk to Matt. Like, maybe there's a better option. Whatever.
Right.
Yep.
And that's the thing too. It's the payment. It's the cash to close. Like, hey, you need this much money. Are you okay with that?
Yeah.
Because again, just because somebody has 50 grand saved doesn't mean they want to spend all $50,000. Or if they do, again, how can we spend that and allocate it wisely?
Yeah.
Like, hey, is this your forever home? Yep. Okay. So let's put less down and buy down the rate a little bit more if it makes sense to do so. Right.
I love that. Buying down the rate. Buying down the rate. Especially in this high rate market. I love it. What's the max?
So the maximum you can generally buy down is about 2.5 to 2.75 points. The reason being is because we can't charge more than 3% of the loan amount in points and fees.
So is that for owner occupy only?
No. So if you go invest anything conventional, FHA, VA, your traditional loans. If you go non-QM, you pay 10 points for all we care, right?
Really?
As long as the lender will let you do it. Like,
Listen here, folks. You want a low rate? It's actually cheaper to buy down a rate than to put more money down on the house.
Yep.
You know, you might have to put down 100 grand to get it down $200, where you could buy down the rate for much less,
right?
And save that $200.
Especially when you get into higher loan amounts.
Yeah, right.
I mean, a quarter of a point on a $500,000 loan could mean more, right, than buying
50
grand down.
Payment.
It really could.
Yeah.
So, like, okay, what does it cost? It costs 1 point. Okay, so let's spend $5,000 instead of 30, and you get the same result.
Yeah,
and you pay less over the life of the loan.
Yeah,
like this is a no-brainer.
Yeah, I think I mentioned it in the past. Like I bought down my rate to 1.99.
Yeah,
I think it was like 16 grand or something like that. Like that's 16 grand,
right?
To get down to just under 2%,
right?
Sign me up.
Deal. And I never
sign me up.
Now I never have to touch it, and you're obviously going to make more than 16 grand as the difference in that long run.
Yeah, exactly.
So that's the thing, right? Just being communicative with people, and just always, and then they're 9 to 5. I know I mentioned that's not all of it, but they are. They're 9 to 5.
Yeah.
You know, they a lot of them are salaried, and then they get their quarterly bonus based off of the amount of loans that they close.
Sure.
But their quarterly bonus is a couple $100 at the best.
Yeah.
Right. So
they're not pushing to
the
close
incentive
more.
is not. It's not there to be like, we have to get this thing closed.
I'm going to work past 5 p.m. every night to get another $300.
Right. It's just not there. So whether your loan closes or not, they are generally making the same money. So there's no incentive to make things work. It's just it doesn't work. It's too bad. Too bad.
I actually am doing less work and making more
and making the same money. Yeah.
That sounds like a better per hour basis than the other way around.
Right, better efficiency. Time management.
Just deny everybody.
Right, like, it's too bad.
Sorry.
But yeah, I mean, those are like the real biggest things. Like local, it's not as well known, right, as like. I was going to say the name, bigger banks or retail lenders. You see the commercials everywhere for retail. You see them in the Super Bowl, right? Those are the people that I'm talking about when I say retail. But everyone thinks that that's where you go. They're the ones that are struggling the most right now because their business is based off of refis. Their business is not based off of purchases.
Yeah.
And why would you go to a lender who's main focus is just refinances, doesn't have the purchase thing nailed down? That's why you see all these layoffs happening at those bigger retail companies because they're not bringing the money in. And then guess what happens? They lay off the processors, and then all rates are going to drop a little bit next year because that's the natural flow. They're going to get all this business in, and they're not going to have processors.
Yeah, even slower.
That's a great,
even slower.
Right, that's a great recipe for success. But yeah, I mean, they're just. Going local is always going to be the cheapest and the fastest option for somebody. All we do is mortgages. It's literally what I specialize in. I don't specialize in auto loans and personal loans. Yes, we do HELOCs. I don't specialize in them because it's just a different type of financing. Again, we can do them, but that's not our bread and butter. Just like renovation loans, we can technically do them. I can't promise you I'm going to be good at them because I don't. That's not the bread and butter, right? Where that's where, those banks come in. But again, your purchase, your 20% down lights out loan purchase is getting delayed because someone has a rehab loan right in front of you that's clogging everything down. It's like, that's a little annoying.
Yeah,
that would annoy me a little bit if I actually knew what was going on the back end.
Yeah, you've got a timeline that you want to close on because you're going to set up movers and all that stuff. Whereas the rehab guy, the rehab loan,
Right.
is a different scenario.
It's completely different. But I don't know if you want to, real quick on your end, like if you kind of mentioned it, if you see someone that has that pre-approval, it's not, you can't tell somebody where to go, but it's like, hey, you can kind of like pros and cons of each.
Yeah.
Like from like a list side or a buy side, like do you kind of, I don't want to say favor one, but like, hey, here's another option maybe for you or something like that.
Yeah, just advise, right? Like it's my my role to advise and guide, and then the buyer or seller decides.
Right, they make that decision.
I guide,
100%.
they decide. So having options and guiding on what those different options are and look like. Even just saying, hey, here, contact these one or two people. Like contact Matt. He'll run through it. If it doesn't make sense to you, you don't like it, fine. But at least you had the conversation.
Yeah, exactly.
On what the difference is and what that could look like.
Right.
Usually, it's going through that approval process again because that's just what needs to be done to like give you an accurate picture.
Yeah.
But yeah, I think like you said, knowing 99% of the time I'm getting, oh yeah, I got this pre-approval. I don't know how much a monthly that is though. Okay, well let's call
figure that out.
ABC Bank and see what they tell you.
Right.
All right. Well, ABC Bank, Joe Smith at ABC Bank is not available right now, so we'll wait. We'll find out.
Right.
No problem. Let's I can generally
give you an idea.
Pull a mortgage calculator and say, all right, this is really where you're going to be.
Yeah.
For this type of home and these taxes and what this insurance looks like. Is that where you want to be? Yes or no? Okay.
Right.
All right. Cool.
Right.
I'm happy to do that, but that's a great conversation to have.
But
it's like day one conversations that should be had.
Right. Right. It would almost be like, if the buyer came to me like, hey, I'm trying to reach, Joe Smith, the realtor, but to pull comps, but I can't reach him. Like, what do you think this is worth? Like, I can, but
yeah, right.
It's like,
but it's not exactly my wheelhouse.
This is not exactly what I specialize in.
Yeah.
And I mean, you can get him a good idea, but it's not the definitive. Like, this is what I would offer.
Right.
So that's just where it's definitely different. And I just thought of another thing too. We do things like this, right? We know agents. We network with a lot of different agents.
Yeah.
For us in particular, Southern New Hampshire and now Northern Mass, like our name is starting to get out there more and more.
Right.
So when you have a pre-approval that's from us, the agent probably has worked with us
and knows
how we work. They know the quality of what we're doing. And, you say you go to this big networking event and you meet a bunch of people and then they see a pre-approval with your name, my specific name on it or Rich's specific name on it because he's local to the area. It's like, oh, I love working with them.
Right.
Like, okay, maybe they're not the best offer, but let's go back to them and trust me, this team's awesome. Yeah, okay, they're $5,000 off, but let's see if they'll come up.
It gives the buyer or the seller the opportunity.
Right.
Yeah.
Right.
Exactly.
So the team around you matters.
Mm-hmm.
Obviously.
Yeah, exactly.
I shouldn't say obviously because that's a lot of people don't understand that and every real estate agent's very different. Every lender's very, very different. I got somebody under contract Sunday who has been looking for 6 months. They went to an agent that is down in Reading. I think Reading or Andover, one of the two.
Sure.
And then a week she switched lenders to me, switched real estate agents to her. First offer she put in, accepted.
Done deal.
It's like, imagine that.
Beautiful.
Imagine that.
Exactly.
Right. And in a competitive North Shore mass market, like it matters who you're with, right? Some people just know how to get things done. Like, how to get things done. Like you and Jan, you do. Like,
we try our best. We've been doing it enough and, volume helps to see a lot of different things and learn a lot of different things. So Exactly.
Yeah.
Where can people reach out to you?
So they can reach out to me through cell phone, 603-475-5471. I'll probably be below in the comments and captions and all that fun stuff.
Yeah.
You can email me at my email, mcdonald@pmlhomeloans.com. I'm now on Google, so if you Google
Nice.
loan officer near me in Southern New Hampshire, I will likely be popping up. So
Very good.
if you want to just message in and get a loan.
There you go. Easy. How easy can that be?
How easy can that be?
Yeah.
I always botch this, Jesus.
www.findnhhomesforsale.com.
Right,
Boom.
Me and Rich are on that website there.
Yep.
All my social medias you can reach out to me at. Like I get messages from all different platforms, which I love because that means that I am everywhere, or I'm trying to be everywhere.
Yeah.
But literally at any point, like 9 o'clock at night, like. Tell people I'm a 25-year-old mortgage broker. So if you text me at 9:30, I'm probably on Instagram Reels. So I will just respond.
Exactly.
But where can people find you, Rich?
Yeah, www.findnhhomesforsale.com, Rich at RacineRealtyTeam.com. Next 2 weeks from now, we got guests coming in via Zoom.
We got our first Zoom guest.
Yep. So it's Mark Bashirs. I'm going to leave that as a teaser.
Yeah.
He's a wealth builder.
Yes. Yeah.
He's a wealth builder.
Yeah.
So he's going to have some awesome content and information that I think everyone's going to want to hear. When we're talking about why money matters, it's real estate, it's investing, it's lending, it's banking, it's growing your wealth. So, we're opening it up to
different avenues.
Avenues of growing that wealth.
Yeah.
If that's a hint, or at least it won't necessarily be all real estate.
Yeah.
But his systems you can use for real estate.
Right. Right.
So that'll be really, really interesting. I'm happy to, I'm excited to talk to him.
Yeah.
And then a week after that, the lumberjack landlord.
So we got a bunch of different. We're starting to line up a bunch of different guests here.
Yes.
Like you said, money matters. We want it to be obviously kind of centralized around the whole real estate because that's where we obviously specialize in.
Yes.
But we also want to try to give as many options as possible because there's not just one path of building wealth.
Yeah.
So let's explore all of them and keep minds open and at least hear people. And it's like, oh, I never thought about that.
Yep.
Like, that's something that you can do with that. That specific path there. I never imagined that could translate over to real estate.
Hopefully open your mind, open your eyes to something different. If it works, great. If it doesn't, okay.
Right.
Providing those options.
Keeping all options open.
That's right.
But that is episode 10, and that is why money matters.